Samir, nice to see you today.
Nice to see you, Kerr.
So it's been about a year since we last discussed the Canadian small cap strategy on the podcast. So it'd be great if you could start the conversation, or if we could start the conversation with a recap of what's been going on in the Canadian small cap space.
Last year was a really good year to remind us that markets are a very manic depressive kind of a beast that can change its thoughts about the environment, the economy, or particular companies very much. And Buffett has a very interesting quote. I think he took it from Ben Graham of looking at a Mr. Market perspective, someone who is very moody, changes their opinion all the time, and but they knock on your door and they'll offer you opportunities to either sell or buy specific companies, specific stocks from you. And I think 2023 was good on that because the year started off with more or less high optimism. Then towards the middle of the year, the moods of the market shifted as the markets have started to doubt whether the so-called scenario of soft landing is possible at all. And towards the end of the year, the moods got back, and there was an increased signs of the economy doing better than anticipated, but also the mood of the market changed. So that's on the external side. I think it's very important to be mindful of that, not to be too hung up on that, but be mindful of that and be mindful of the mood of the market and take that as an opportunity and not get too carried away with the same moods of the market. And as I look back, we were cognizant internally of those moods throughout the year, and thankfully we took advantage of some of the opportunities that the market presented us in the middle of the year.
Awesome. So to start the year, as you said, some concerns around whether we'd have the soft landing. Things ended on a pretty positive note. Given that backdrop, maybe we can move a little bit to some of those internal observations, things that the team maybe did. You mentioned a few opportunistic, perhaps, moves that the team made. Can you give us some more details on that?
One of my favorite quotes from Ben Franklin is "Diligence is mother of good luck." So that's why we have the process and philosophy, and sticking to that philosophy and process and not getting carried away with the moods of the external world is very important. Otherwise, we will do the same mistakes that the rest of the market is doing. One example of that would be Converge Technologies. There was one company where the opinions of the market have shifted a lot for this particular company from years back till 2023 and even till now. In the middle of the year, especially, the valuations have gotten to such extremes that we saw this as an opportunity. And the reason why we saw this as an opportunity is because we did our work, we did our diligence, understanding the company over the years, talking to management often, at least once, in this case, multiple times throughout the year to understand the changes happening in the business. And very importantly, valuation, doing our valuation work, which is the DCF work, and understanding what does the market imply about the future of the company. And it was very evident at the point that the market was implying very continued decline of the business, which was happening right then. In the summer of 2023, there was a lot of pessimism in the business world. To take a step back, Converge provides technology solutions for businesses out there. And because of the lower moods of the market participants, the businesses themselves had cut back on their technology investments. And as a result, it became a self-fulfilling prophecy being reflected in Converge's. But as we looked at what the company is doing, what the management is doing, compared to the environment out there, it was evident that there was a lot of improvements internally in the business. So that's one. And second, the cutbacks in the investment by their customers were very temporary. As you know, I mean, we're using technology now. It is evident that businesses will continue using more technology over time. And there was increasing green shoots of, you know what, Converge may in fact be benefiting from the tailwinds of AI, helping the companies figure out how to deploy AI and supplying them with all the necessary tools and equipment for that, which was very much not reflected in the valuation by the market. But what was reflected is a decline in the business, which we didn't think that it would be secularly happening. That was a great opportunity to increase our position. And I don't want to be short-term, patting us on the back, but I want to show this as a change in the moods of the market. The shares are more than twice the levels we've seen just last summer, recognizing some of the things that we did just by our diligence. Again, diligence is a mother of good luck. Looking at business, management, and valuation.
Sounds like the fundamentals had perhaps deteriorated at the margin, but the broader market really reacted quite strongly that this was a structural issue in the business as opposed to a temporary headwind. At least so far, the way it seems to have played out is it was a temporary headwind. And so then opportunistically leaning into that position has been helpful so far.
No, exactly it. And we see that a lot. There is very delayed feedback happening in the markets. Something happens. For example, the mood in the markets have changed. The businesses start to cut back on their investments. It takes a while for that to get reflected in the financials, for the investors to see those financials. And by that time, the reality might have changed, but the market reacts to that information at that specific point of time. And a lot of times extrapolates that indefinitely. And that creates the phenomena of this very moody Mr. Market dynamic, and that creates opportunities. There's also very interesting a dynamic related to that of just in the crowd, sentiments are contagious. One of my favorite books that I've read in 2023 was Gustave Le Bon, which was this psychologist, sociologist in the 19th century, and he was very fascinated by the shifting moods of crowds of people. And he framed it as a collective hallucinations. Markets, if we apply that to the markets also go through these collective hallucinations, some kind of a hype that excites everyone, and they reflect it as a crowd, and then some kind of a collective hallucination as well to the depressive side that the recession is coming. It's undeniably imminent, which was the story in 2023 that, you know, the recession is going to come. It's only a matter of time in the next 3-6 months, and we're yet to see that. Given that we're the best place to be in is to be very balanced, emotional, not just intellectual.
So this sort of, I guess, more psychological aspect to investing that you're mentioning, I guess the question would be, presumably that applies across all investment types, but perhaps to varying degrees. Do you think there's any unique aspect to this being in the small cap space? Is there any unique implications to some of these things you're mentioning?
I think that applies quite generally to the markets overall, because more or less we're all of the markets are primarily driven by humans, even though there's increasing use of automation and bots out there. But in the small caps in particular, there's for some of the smaller companies, there might be more retail investors involved, and their involvement in the markets is especially lagged, meaning that they get into the markets when the mood is very euphoric, and they sell out. They give up on the companies when the mood is very depressing. So they exacerbate the dynamic which, as you mentioned, in the small caps, it's more easily seen. But you've seen that recently in the larger caps as well, this concentration of the magnificent 7 or 6 or 5. The reason why that is happening a lot of times is because of the retail's involvement in the ETFs, through the ETFs, which has resulted in this concentrated behavior in a few stocks. And their stock charts, at least, behave like very much small cap investments, even though they're one of the largest companies in the world.
I love all these mental models. I find them fascinating. It's always really helpful also to hear, though, how they're applied, how you guys think through when you're evaluating companies and management, and ultimately how stocks end up in the portfolio. And it's nice to get some color on a lot of these sort of frameworks that we have. Thanks a lot for speaking with me today, Samir. I really enjoyed it.
Thanks a lot, Gary. I enjoyed it very much as well.